Good morning everybody, this is Lara from Pure Elliott Wave with your Monday to Friday update for Bitcoin, Ethereum and XRP. Before I get into it today, I would like to remind you that while I am giving you my Elliott Wave analysis for Ethereum for free today, that will end in a few weeks and it'll become a subscription on my website. What that means is actually good for you. It means that if you want expert quality Elliott Wave analysis of Ethereum, you're going to get it on a very reliable basis every week in comprehensive detail. It also means that I'll be able to expand the free offering on this YouTube channel to include daily analysis of Solana. So you're losing the Elliott Wave analysis of Ethereum, but you're gaining analysis of Solana, and we're going to be covering 4 markets, not just 3. So overall, I think that's a win for everyone. If you are interested in quality Elliott Wave analysis of Ethereum, when we launch that on a subscription basis, for the first 24 hours, we'll offer a grandfather rate. If you want to take advantage of that, click on the link below to sign up to our notification list, and we'll email you and tell you when we're going to launch it and when you can get your grandfather rate. It'll only be offered for 24 hours, so if you want to take advantage of it, you do need to be on that list so you don't miss out. Yesterday I was talking about trying to figure out if this pullback for all 3 of these markets was going to be complete at the March 19th low or 20th low, and I said I needed to see what the 20th and 21st of March candlesticks look like. We can now make a judgment on the March 20th candlestick, and for Bitcoin it's a strong bullish engulfing pattern. A bullish engulfing pattern and its reverse, the bearish engulfing, are the strongest reversal patterns. You can have more confidence in them when they have push from volume. I'll make a comment on that when we get to volume analysis. Body of this candlestick must fully engulf the body of the previous candlestick. Here's the close of the red candlestick. The open is at the same level. The close of the candlestick here is slightly above the open of the previous candlestick, so the body for the 20th does fully engulf the body of the 19th. So this is technically, correctly, a bullish engulfing pattern. That's the strongest bullish reversal pattern. This one comes in the context of a short-term pullback, so because it's coming in the context of some downward movement, I will read it as a reversal pattern. It looks like support about 63.70 is going to continue to hold. The moving average situation remains strongly bullish. The short is above the mid, which is above the long. The mid and long both have positive slopes and prices above both of them, so strongly bullish. We might be seeing again a little bit of resistance about 68,800. If price can close above this point in coming days, I would expect again energy to be released to the upside, and on the next upward push I would expect it to just keep going up. Yesterday's bullish engulfing candlestick pattern, though, does not have push from volume. Normally for most markets this would be a concern for me, but in crypto I note when I analyse their sustained lows, they do tend to be rather weak in terms of volume and sometimes range as well off their lows. It's another feature which makes crypto lows very, very difficult to identify. So this is not a deal breaker for me, considering past behaviour of this market. It does make me want to wait for one more session of strong upward movement to really have quite a lot of confidence that that low for Bitcoin is likely to remain intact. But today I have some reasonable confidence because that bullish engulfing pattern is so strong. This little pullback has managed to bring ADX down from extreme territory back into neutral, so this is really good to see. It's not at a very low level, but it is now setting itself up for a new trend in either direction. The DX lines have started to whipsaw. This look is typical of ADX during a consolidation or a pullback, or when the market is in flux from one direction to the next. The pullback has brought RSI below 50, it reached below 50 yesterday, back down from deeply overbought well into neutral. It exhibited bearish divergence, so the pullback may be the follow through from that. So this bearishness here could now be resolved and the market could now be ready for the next bullish run. It's also brought money flow nicely back into neutral after that also reached overbought and exhibited double bearish divergence. So the bearishness here now could be resolved. This is my Elliott Wave count for Ethereum. This is my main Elliott Wave count, and I am going to show you an alternate today, and I'm going to show you how I use Motive Wave to draw that up. My main Elliott Wave count considers the middle of a third wave for Ethereum could have passed several days or a few weeks ago, end of February, and that we could be moving toward the end of a third wave at minute, minor, intermediate, primary and cycle degrees. So within the daily chart, you fit it into the weekly and the monthly. The higher degrees see minor 3 within intermediate 3, within primary 3, within cycle 3. So this is a third wave at multiple degrees, and I expect it's likely we're going to see the end of one or more of those third waves exhibiting vertical upward movement. For cryptocurrencies, they have a tendency to behave rather similar to commodities, but to a more extreme degree. They exhibit from time to time parabolic growth, and when they do that, they have fifth waves to end third wave impulses 1 degree higher, which are the strongest part of the third wave. So it starts out slowly, accelerates through the middle and explodes at the end as you have this nice curve. At the end of minute 3 and or minor 3 and or intermediate, primary and cycle degrees, at the end of those third waves, particularly the larger degrees, I will be expecting vertical upward movement as over 90% likely. Not so sure about the lower degrees for minute, maybe not minor, but definitely intermediate, primary and cycle. Those 3 big waves I expect to end with a lot of strength. So the middle of the third wave may pass here, but the strongest portion of upward movement is still expected to be ahead. So I'm not concerned at seeing the middle of the third wave for Ethereum having been passed here. Not concerned at all. If that is the middle of the third wave, then for minute 3 we have 1, 2, 3, 4, we need a fifth wave. If 4 continues lower, it may not move into one price territory below 2717.20, but it looks like it may have found support just a little bit above this acceleration channel. Let's have a look at how I would draw up an alternate. I've been mentioning it to you for the last few days. I'll show you how I do that. So this is essentially the same, but what I'm going to do is I'm going to move the degree of labeling in this movement here all down 1 degree. So using motive wave, I detach that, decrease the degree, go over to my Elliott Wave components, grab an impulse, make sure it's the correct degree. Yep, I want minuet, attach it to the end of minute 3, the start here, and then put minuet 1 on my fifth wave here. And so now I've moved the degree of labeling here all down 1 degree. This could just be a first wave within minute 3, and so the middle of the third wave may not have passed. And so I've tried to outline this for you in comments over the last few days. This is what it would look like. The invalidation point's the same. I'm still seeing this pullback as a fourth wave. Now it's just 1 degree lower and it can't move into first wave price territory. But when my minuet wave 1 for this idea could be complete, the invalidation point moves down here to 2092.33 because the following pullback expected for another second wave may not move beyond the start of its first wave. Shouldn't get down that low though, should be relatively brief and shallow at this point in a big third wave. Now I hope that makes sense. The 2 wave counts I've got here, the main one seeing the middle of the third wave, and this new alternate seeing it just as another first wave, completing as an impulse higher. This candlestick for the 20th of March is just a piercing pattern because the close of this candlestick at 3516.66, that's the upper end of the body because the candlestick is green, is slightly below the open of the previous candlestick for the 19th, which was at 3520.31. So the body of the 20th has not fully engulfed the body of the 19th. It's really close, but it hasn't managed to do it. So it's not a bullish engulfing, it's a piercing pattern. That's not the strongest bullish reversal pattern, but in this instance it is pretty strong because it's very close to a bullish engulfing pattern, but not as strong as it would be if it had managed to close above the open here. So we do have a pretty strong bullish reversal pattern in the context of a short-term pullback with price finding support at 3050. It does look likely that downward movement could be complete here. I would want to see follow through in the next session with a strong bullish pattern, preferably with an increase in range beyond the 20th. That would be really good to see, and then I would have more confidence that this pullback for Ethereum is complete. Today I have some reasonable confidence. Finding resistance at the moment about 3580. If price can close for the 21st above that point, then look for next resistance again about 4200. The piercing pattern does have push from volume. Unlike Bitcoin, whose bullish engulfing pattern did not, Ethereum's piercing pattern does. So I do have some reasonable confidence that this pullback may now be over. We could be in the early stages of the next bullish run for Ethereum. ADX, however, is slightly increasing for yesterday's session. and the negative DX line remains above the positive DX line. So ADX is finally telling us there is a downward trend at the daily time frame. This is a lagging indicator. It's based on here a 14-day average, so it's going to take at least 2 weeks to catch up with any potential trend change. This may be a lag of finally telling us that, yeah, there's a pullback, a short-term downward trend, but with the candlestick for the 20th now a strong green candlestick and a bullish reversal pattern, I would be hesitant to read this as expecting downward movement to continue. RSI was bought down from deeply overbought, well below 50. It's slightly above 50 today. That's absolutely fine. There is such a long way to go now for Ethereum before it indicates there is an upward trend which is very extreme in danger of ending. This deep pullback has managed to bring RSI deeply out of overbought territory. Really good to see, setting itself up for a new bull run. It's also brought money flow out of overbought nicely into neutral territory. Ethereum is set up now for a new bull run to continue. My Elliott Wave count for XRP remains the same, seeing another first wave leading expanding diagonal complete here, and the pullback for a second wave correction possibly complete here. But again, as we so often see, XRP is weaker than Bitcoin and Ethereum. This is not a bullish reversal pattern. It's possible minute 2 could continue lower as a single or double zigzag, and if it does continue lower, it may not move beyond the start of 1 below 0.4883. A technical requirement for a bullish piercing pattern, of which Ethereum has, is requiring the close of the piercing candlestick to be at least halfway into the body of the previous candlestick. XRP didn't manage to do that. We do not have a bullish reversal pattern, but we do have a couple of bullish long lower wicks. They're not very long, but they are reasonably long, and I like to pay quite a lot of close attention to wicks. I find that's really helpful, if not for long term, certainly for short term movements. So following these bullish long lower wicks, I will expect an upward session for the 21st of March for XRP. So what was resistance at 60 cents again turns to support. Look for next resistance at 0.675. Upward movement for the 20th does not have push from volume. Recent strongest movement is downward movement. The volume profile for the very short term remains bearish, but for the longer term remains bullish, because the strongest volume was on 10th of March, that huge bullish candlestick pattern. There is a lot of strength in volume and range to the upside. Volatility and volume are supporting upward movement. Those are hallmarks of a bull run and not a bear market rally. ADX is declining. It's now at the lowest level it's been for a very long time for XRP. This is actually great to see. ADX is setting itself up for a really strong signal in either direction, but we're going to get a strong signal soon. RSI didn't really reach very overbought. It's nicely in neutral territory. There's plenty of room for a trend to develop in either direction for XRP, and money flow remains neutral. Thank you so much, everybody, for your support. That's the end of my free analysis today. I just want to say thank you so much to everyone who's signing up for my notification list. I have had quite a few people actually ask me when or if we're going to be able to provide Ethereum analysis on a subscription basis, and I'm really happy to be able to bring this to you in a few weeks. And the notification list is growing really quickly, so I think there's quite a lot of interest out there for us doing this, and I thank you all so much for your support, and I'm really looking forward to expanding our in-depth analysis and to cover Ethereum as well as Bitcoin.